Good afternoon, everyone. Welcome to the afternoon session, and thank you to Tom. Great talk on carbon. Fortunately, I'm talking about coffee pricing, which is a bit more stressful, you might say, given recent times. Today, we're going to be talking about the key drivers of coffee pricing. For you guys as the roasters, also for Origin, and just generally I'm going to give a bit of a macro update on where we are at the moment. The first 3 points here, I would say are the key drivers in terms of what impacts the price of coffee. Now, I wouldn't usually include freight in there as well, but in the last 18 months, I would say freight has played just an important role as the other 3 things on that list. Although, as we'll come on to see, it's starting to play a bit less of a role due to freight pricing coming down. This presentation is not all going to be doom and gloom. I feel like every time we talk about coffee in the last 18 months, it's very depressing, quite anxiety-inducing. The good news is there are some things that are coming down, so that's a thing that we can celebrate. And we're going to first head to the New York coffee price. Before I talk about what's going on with the New York coffee price, I just want to establish what it is, because I think there's a great scene in The Wolf of Wall Street where Matthew McConaughey is talking about markets and pricing. He says, oh, it's a fugazi, it's a fugazi. What is it? And I feel like the coffee market is very much in that bracket. Everyone has like different names for it. Is it the market? Is it coffee? Is it New York? Is it the New York Sea? Is it the sea market? Is it NIBOT? There's lots of different words which are very confusing and often refer to the same thing. So this is the New York coffee market for Arabica coffee. Most of what DOA trades is Arabica. We also trade Buster. So I'm going to just talk about Arabica today because I feel like it's probably a lot more relevant to what you guys buy. This chart is in candlestick format, and if you're unaware of the format of a candlestick, there's 4 bits of information that it tells you about. It tells you about the price of opening, it tells you about the price of closing, the high of the day, and the low of the day. So it's always going to tell you 4 different bits of information. Coffee is a market which has an open and close. So it opens in the morning UK time, it closes in the evening UK time. Some markets like Forex open 24/7. So in that case, it's just always open and trading, so you don't really have candlesticks. But for coffee, this is generally the best way to look at how pricing moves. And I've taken November 19 as my start date. So today we're going to talk about pricing over a 3-year horizon. Although for some of the indicators like interest rates, I will look at a slightly larger time range, but certainly for coffee, we're going to be looking at the last 3 years. As you can see, we were trading quite a flat environment for a few years, and suddenly in July 21, there was a big spike due to a frost in Brazil. And it kind of went up and up and up, and recently it's come down quite a lot. When we're buying coffee, there are 2 ways of buying coffee. One is called outright or fixed price, and one is on a differential. So most coffee in the world, including a lot of specialty, is bought on a differential. What does this mean? This is when we talk about a price which is the market plus or minus the price. So the coffee market is in US cents a pound. All coffee is bought in dollars. So when I'm talking about pricing, I'm talking about US cents a pound. The coffee market is in US cents a pound. So we go here. These are all US cents a pound prices. So 152 cents or $1.52. This is what we have on this axis. So when we have the market here, if I'm buying coffee from someone, say in Colombia, let's call them Omar, if Omar says the price of coffee, of his coffee, is the market plus 50 cents, that would be this market plus 50 US cents. So as the market goes up, because his price is the market plus 50, the price of that coffee goes up. Equally, as the market goes down, the price of that coffee goes down because his price or his differential is linked to the coffee market. So whenever we talk about coffee pricing, there's always the market price and the differential price. And we'll go on to what the differential looks like in a second, but the key takeaway from the New York coffee market is that most of the world buys their coffee linked to the market. A big portion of specialty is bought this way as well. Equally, a big portion of specialty is bought outright, what we call fixed price. And in my example here, when we talked about Omar's price, which is his price plus his differential, some producers would prefer to have a fixed price. So if we just take 200 cents a pound up here, for example, a producer might say, the price of my coffee is 200 cents a pound. It doesn't matter what happens with the market, that is a fixed price. So even if the market's going up or down, the price does not change. So the key takeaway from that is that there are two different pricing models of coffee. One is fixed price, and one is on a differential linked with the coffee market. And as you can see, the coffee market has been very, very volatile the last few months. And if we go back to my example of Omar in Colombia, if his price, I think I said it was plus 20, if he's got a price of plus 20, and we're in September at 220, then if he was to ship his coffee at that level, he'd be pretty happy. If he waits a few months later and ships it here, it's going to be a lot less valuable in terms of what he's going to get paid. So the market is a huge impact on the price of coffee, but it's only half the story. The differential is the other half of that story. The ICO, which is the International Coffee Association, based here in London, provide quite a lot of transparent data on coffee pricing. And I've just taken their differentials on a 5-year basis. And as you can see, if we take, so KC is actually the coffee market, so you can kind of ignore that, but it's good for historical reference. If we take Colombians, our friend Omar, this is the New York coffee price, and on the left is the differential. So, again, for Omar, if his price is plus 50 up here, this is actually in the real life diff. You can see it going up and up and up and up. And then very recently it's actually taken a big hit down. But for origin, and we will come to how that price moves until it gets to you guys. But for origin, the New York coffee price and the coffee differential are the two key components of what the price is for them. You add them together and that becomes your FOB price. And obviously, for that coffee to get to destination, to you guys, if those two things are moving, it's going to affect the price for you guys massively. If the coffee price goes up and differentials go up, such as this movement here, the price of coffee for you guys is actually going to increase double. If they go in different directions, sometimes they can actually counterbalance, and the end result is no change. So if you have a high market and a low differential, if they switch, you get to a low market and high differential, the end result might actually be no change. The key thing to take away over the last 3 years, or especially from this period here, is that coffee pricing is going up massively, and so are differentials. So we had, remember I said that there are 3 key drivers for coffee pricing: the New York coffee price, differentials, and Forex. In that period there, where the coffee market was going up, coffee differentials were going up as well. So we had 2 out of the 3 going in the wrong direction. And unfortunately, Forex was going in the wrong direction as well. This is the pound-dollar Forex currency pair. Obviously, we're here in the UK today, so I've taken the pound-dollar as my case study. All coffee is bought in dollars, so if we were talking about Europe, I would look at euro-dollar. If you're in America, luckily you don't have the exposure to the Forex because you're American and you already have dollars. But for countries that are not using US dollars, there's always a Forex variable to take into account. And as you can see, unfortunately, since about November last year, the pound has just lost a very, very large portion of value. And unfortunately, that's meant that the 3 key price drivers for coffee in pounds a metric ton pricing, or pounds per kilo, which is what most people here will be buying in, all those 3 things have gone in the wrong direction in the last 12 months. And I did promise you there would be some good pieces of information here as well. And as you can see, we are seeing a bit of a recovery in the value of pound sterling against the dollar. And actually, my first slide, you would have noticed that in the last, I think since early October, coffee has also come down pretty rapidly. So in essence, for the last sort of 3 years, we've actually, to be honest, we were trading in quite a flat environment for a while. So maybe if we say the last 2 years, all of the key variables that make coffee pricing change have gone in the wrong direction for European roasters. However, as you can see from here, pricing has come down a lot recently, and in the Forex graph, it went the other way. So looking forward, although it's been a very persistently high price climate for a few years, things are changing. And if you're worried about coffee pricing, which I know a lot of people are, and having to have difficult conversations with the customers about why has coffee pricing gone up so much, the tide is changing. And I hope that Forex gets a lot better, because I think if you talk about the New York scene differentials, when they're high and Forex is strong for us, that means that Origin is getting paid quite a lot, but the price is being kept low for the UK and Europe because we've got a strong currency. That's kind of a win-win. It means the producers are getting paid a high price, but the currency for us is bringing it down in terms of pound sterling or euro levels. So we'll see if that happens. As we're going to see, freight was my kind of number 4 thing on what impacts pricing. This is the Global Container Index, which is a composite index and it takes into account all the global shipping routes. As you can see, it went absolutely crazy in 2021 and took a lot of people by surprise, and has since come down equally as fast. In terms of coffee, this hasn't really been observed yet because I was sort of researching this index last week, and actually a very large percentage of the index is China to the US and China to Europe and vice versa, which obviously doesn't really impact coffee. It might impact you other like ancillary products if you import cups or packaging from China, but in terms of coffee, which obviously comes from South America, predominantly in terms of volume, and Asia, their kind of rates are actually still quite high. So I would imagine that we'd probably be around here if we were just taking freight prices for coffee origin countries to the UK or Europe. And I don't have the stats on me, but I did talk to our logistics team. Coffee freight pricing is still quite high, but it is expected to come down in the next 12 months. So if you were to add this as into our top 3 things of what impacts pricing, you're seeing a high New York, high differentials, weak pound and weak euro against the dollar, and high freight costs. It makes for very, very expensive pricing to roast. And I don't know, it'd be interesting to see who's raised their prices in the last 12 months. Okay. Yeah, it's a tricky conversation. I think it'd be very interesting in the Q&A to see how people do that effectively. I think, as we all know, there's a cost of living crisis at the moment, so I think consumers understand that pricing has gone up. Obviously, it's never nice to raise your prices, so it's a challenge. I think that those 4 factors, as we've seen, the New York has now started to come down. Coffee differentials are quite stable, I would say. Forex has improved, freight should improve. So the good news is, hopefully, you'll start to see pricing come down. So it won't just be kind of a high price environment forever, which I think it's felt like for a while. Although, to be honest, if you look at a longer term period, 12 months is actually not very long. But I think it's felt quite a lot because nothing really seems to go right anymore post-COVID. Everything's always expensive, late, doesn't come, is defective. But yeah, the good news is a lot of these big levers are now moving in the right direction. So hopefully we can start something like that. If we move from origin to roasters, this is natural gas futures. And I've just used it as a proxy really just to show probably something which you guys have quite a better idea than I do about natural gas. But it's just to show that another very important component amongst our supply chain has got a lot more expensive. And you can see, I think that this was Russia's invasion of Ukraine. And it's gone up and it remains very volatile. It's quite interesting to see how winter pricing develops. I don't really have any really great news about energy pricing. I think it's going to be quite high for a while from the indicators, but obviously I haven't put that in the key indicators package of coffee pricing, so hopefully it won't be as impactful as that. But I wanted to take I've stolen a slide from our friends at Fairtrade, and we always talk about cost of living in Europe, and I thought it would be quite interesting to share with you guys what goes into producing a bag of coffee at origin. And if you haven't seen their work, Fairtrade have done some really amazing work on living income. And they've taken, I think, Colombia, Uganda, and Indonesia as their case studies. So I thought I would just take Indonesia here today, show you a bit about what goes into a cup of coffee. They've highlighted what are the main inputs into the price of an Indonesian coffee bag. And as you can see, the largest segment is paid labour harvest. Everyone always talks about the cost of labour, can't get the right staff, too expensive, don't know what they're doing, nightmare. And that's no different in origins as well. And as you can see, that's, I don't know what that represents as a percent, but it's a huge percentage of the cost of a cup of coffee. And as we all know, labour costs have gone up massively all over the world, and origin is no different. And we were talking earlier about, or we saw a video from Omar from Kapukas, talking about how we need to look after pickers, we need to look after workers in coffee farms. It's not just about the farmer, Often the pickers are actually the most marginalised people, but they also come at a cost as well. I couldn't get a second graph in fair trade, but they did confirm that of these inputs, fertilisers in blue and paid labour harvest in pink were the two inputs that went up the most in the last 2 years. Obviously, paid labour harvest is the biggest segment as well. So when we look at that as a percentage, that's sort of going the wrong way in terms of coffee pricing. What does that affect? That will affect the differentials. So each coffee will get sold in its differential, and when cost like that goes up, differentials will go up. And I would say those costs are quite sticky as well, because they don't tend to come down. Fertilisers, depending on what happens in Ukraine, hopefully will come down over the next few years, but I would expect them to remain quite high. If you are more interested in learning about living income, I think Fairtrade are leading the market. They've done a lot of really good work and have access to millions of coffee producers. So if you're interested, I'd really urge you to go and read more about it. I think Fairtrade often do amazing work, but aren't very good at marketing what they do. So I think we always try and highlight what they do, because they've often got access to amazing data and just need to sort of publish and market what they do better. But in terms of, if you're interested in what kind of costs look like at origin, they're definitely the best resource out there at the moment. Inflation. Well, inflation. This is, again, I've taken November 19 here, going up, and then rolling down here, going up. I don't know who I was speaking to earlier, but someone said that inflation somewhere was like 30%, which kind of shocks me. In the UK, I think we're definitely in double figures. This is figures for the US. And I've highlighted this, and we'll talk about interest rates as well, but in terms of macro sort of snapshot of where we are, although the 3/4 key indicators for coffee pricing are all starting to get better, unfortunately from a macro perspective, inflation is persistently still quite high. As you can see, it's in the last kind of few months, it hasn't really come down very much, and it's more importantly not coming down as quickly as the market expects, or the Federal Reserve expects. Often in the macro environment, the role of expectations is actually more important than what actually happens. And unfortunately, this is not coming down as quickly as the market's anticipating. If we go to interest rates, which are always linked to inflation, I would say this is the key bit of macro news for the next few years. Is inflation is running rife, and the US is trying to calm that inflation by raising rates, and it's doing it at a very, very fast pace. So I just highlighted here the last few months, and you can see that it's pretty much a vertical line of the US raising interest rates. I think the only other time that it was raised this fast was here, which Volcker was trying to calm inflation down. And I would say, why is the coffee market suddenly pinged down? The main reason, in my opinion, is interest rates just going up so quickly. So the Federal Reserve is trying to raise interest rates to kill demand, and then which will hopefully induce inflation to come down. When it does that, a lot of people sell commodities because they think that there's going to be no demand for coffee. So actually, in my opinion, this is one of the key drivers for coffee pricing coming down in terms of the New York Sea. I expect that, or they've already signalled that will continue throughout 2023. So that bearish indicator should mean that coffee pricing shouldn't go up too quickly. or if it does, it shouldn't stay there for very long. I think that's the key macro indicator. The other key indicator is that next year's Brazil harvest is supposed to be very good. Brazil produces around a third of global output. So the fact that we're raising interest rates and the fact that we have a really good Brazilian crop should mean that coffee pricing shouldn't go up, or if it does go up, it shouldn't stay up for very long. So although interest rates are going up at quite an alarming pace, for coffee it actually should mean the prices should stay a bit lower, or is at least one of the key indicators for that. Now, I said I didn't want to get too depressing, but I'm talking about debt. I think this is very interesting because I find this graph very interesting for two reasons. So the blue line is federal debt, so this is debt that the Federal Reserve and the US government have, and the orange line is private debt. And as you can see, the blue line, the only other time where there's been such a high percentage of overall debt to GDP was in the 1940s. And this points to a very fragile US economy. And a lot of people talk about the interest rates continuing to go up. And the last time the interest rates went up really fast, this blue line was a lot lower in terms of how much debt there was flying around the economy. So although we can kind of be thankful for interest rates going up and pushing down the coffee market, there is a real concern amongst kind of macro commentators in the market that they might be raising rates too fast and there's too much debt flying around, so it's going to cause a lot of businesses to struggle. So although the underlying message of today is that the key indicators that impact the price of coffee will point to coffee pricing coming down, unfortunately a lot of the macro indicators point to quite a choppy 2023 and potentially a choppy decade. But let's not focus too much on that. As I said, in terms of why has coffee pricing come down, we know that the New York coffee prices come down. We know the differentials have stayed quite similar. So therefore, if you add those two together, they've come down. The dollar has weakened against both the pound and euro, which is helping. And we've got quite a bearish macro outlook, which is also putting pressure on commodities to go down. The looming Brazilian crop next year is also making a lot of people think that pricing should stay quite low. And I put certified stocks on there, which is a quite key indicator which I would encourage you to look at if you don't already. This is basically the number of bags in certified warehouses across the world, and it gives you a bit of a quick glance at how much coffee is around. It went to its lowest level since the 1980s last month, which kind of showed that in the short term there wasn't much coffee around. However, it's really starting to build again in its levels. So we have a lot of coffee potentially in warehouses in the US and Europe. We have a very large Brazilian crop upcoming. And people are quite bearish on macro outlook, and that generally pushes commodities down. Dollar weakness. I think it's important to mention that most people see sterling improving and the euro improving against the dollar. This is not because they think that the US and the EU, this is not because they think that the EU and the UK are in great shape. This is just because they think that the US dollar will weaken. So it's not because the pound or the euro is strengthening, it's because they think the dollar is weakening. And this goes in a bit to what I talked about earlier about how a lot of people think there's a lot of fragility both in the EU, the UK and the US. But I think more so in the US at the moment. Inflation we discussed, and their link with interest rates. as I said, I think the US Federal Reserve has said they're going to continue to raise rates every quarter next year. The Bank of England, I don't think will raise rates as fast as the US, but we'll see. But yeah, that's the general 3-year copy market update. I think it started in quite a pessimistic place, but there are some positives to say. And in terms of copy pricing, when we were talking about this update, we wanted to talk about costs that affect origin, costs that affect destination, and costs that don't affect anyone but have an impact. So, like I said earlier, no one makes any more money or loses any more money from a Forex transaction. However, the rate of a Forex will push up a price or push down a price massively. So for us, we obviously are praying for a stronger sterling and a stronger euro, but the COCAFCAL doesn't get any more money or any less money. I think that's quite an important thing to bear in mind as well. Thank you for listening and looking at my graphs.